Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and here are make it four important things to pay attention to for the upcoming trading week. Now let's start things off with the earnings front. Obviously, earnings have been in play and really moving these markets, and are there any major companies that are reporting this week which may impact your portfolio? Well, the true answer is probably something out there is going to move your portfolio, or at least move the markets. Let's take a look at the calendar and see what is going on. 813 companies will be reporting this week, so there's quite a few out there that you may know. Start things off on Monday with Arista Networks, Cadence Design Systems, and First Energy. Tuesday brings you Coca-Cola, Cleveland Cliffs, TripAdvisor, Akamai, Devon Energy, and Herbalife. Wednesday, you've got Roku, Cisco, Biogen, Energy Transfer Partners, Kraft Heinz, The Trade Desk, and Shopify. So that's probably your busiest day of the week. It's going to be on Wednesday. Thursday brings you Applied Materials and Southern Company. And finally, on Friday, you've got John Deere and AutoNation. So nothing that I would say is overly groundbreaking with regards to earnings front, but there are some big names which may impact sectors, and of course, that could move markets. Now, we don't really have any major speeches by Jerome Powell this week, but we do have some big economic data. As you might recall, if you've been watching these for any period of time, the focus is squarely on inflation. And fortunately for us, we get the double dip this week. We don't usually get the double dip. Sometimes it's spread over a 2-week period of time. This week, we've got two major announcements all happening on the same week. So let's start off with our consumer price index numbers. We're looking at U.S. inflation. On Tuesday at 8:30 a.m. Eastern Standard Time, we get our CPI numbers. Now, of course, this represents the cost of a specific basket of goods and service to us. And as prices start to decline, that means inflation is subsiding, and that's what we've been wanting to see. As you can see on that chart on the top, it was escalating significantly all through 2021 and early 22. However, it's been falling ever since. And you notice the most recent reading was at negative 0.1. And this makes people feel warm and fuzzy like, hey, inflation's under control. But wait, hold on to your hats here, because here's the expectation. Look on the hard red edge there. You are now expected to see a 0.5 print. Now, this is month over month that you're seeing on this chart. I'll show you the year over year in just a minute. This is important because the Fed and Jerome Powell have been saying, hey, inflation seems to be calming down a little bit. It's great. It's disinflation. It's the early stages. Well, all of a sudden, we're going to go a month over month reading, which was negative 0.1%, meaning inflation is declining, to all of a sudden 0.5, which is a fairly steep increase in inflation. Now, that's the expectation at this point. We'll have to wait and see what actually happens at that announcement on Tuesday. Now, below that, we now have the producer price index, which comes out 2 days later, Thursday, 8:30 a.m. Eastern Standard Time. We get the PPI numbers, and you can see a fairly similar picture. It has been declining recently. However, if the CPI number surges from negative 0.1 to 0.5, then most likely PPI will follow. But what does this mean for the big picture? Let's take a look at consumer price index year over year. Now, if you notice here, we've been on a fairly sharp decline for the past several months. Peaking over there looks like 8 or 9%. Now, all of a sudden at 6.5% year over year for CPI. So this is great news for consumers and for the Fed, because this means they have a little more flexibility with what they can do. However, let's look at what the expectation is. As I just told you, the expectation for CPI month over month is to go from negative 0.1 to 0.5. And you would think that that might spike the year over year one. However, expectations right now are going to come out about 6.2. So that's great. Even though we might get one data point this week that says, hey, higher inflation for the month, doesn't mean that the trend is surging back up. If we start to see this curl back to the upside, then we could be in some real predicament with regard to the Fed, inflation, and our economy going forward. So inflation, big week this week on Tuesday and on Thursday with CPI and PPI numbers. That will be market movers, so make sure you pay attention to those announcements. However, they will happen 1 hour before markets open. So when the markets open on Tuesday and on Thursday, the excitement will be priced in. You'll see a lot of pre-market activity. And for those of you trading in the futures markets, maybe some great opportunities to make trades on those swings. Now let's look at the final piece of information for this week. There actually are many more, but I had to cherry pick some major items and bring them into, let's say, 3 or 4 topics for today. We're going to talk about retail sales. Now this ties hand in hand with this chart that you see right here. When you look at this picture, it's showing CPI numbers declining. That's consumer price index. Now, if demand was really increasing, meaning more people are buying and buying and buying, then what we would see is CPI actually surging to the upside because demand is going to drive prices up. But what this tells us here, with consumer price indexes falling as it is, that most likely retail sales numbers are suffering as well. So let's take a peek at retail sales numbers here and see what they're showing. On Wednesday at 8:30 a.m. Eastern Standard Time, we get our retail sales number. And you can see for the past 3 months, it's been getting lower and lower and lower. Now, this is a bad sign for consumers because as retail sales decline, that means that businesses are starting to feel the pinch. And we've already been hearing stories and news headlines about all these companies making significant layoffs, not 5 or 10 people, but thousands of employees. Why is that? Could be for multiple reasons. One of the main ones is that demand for those services of those businesses is declining. Why? Because the chart shows you that retail sales numbers are declining, meaning people are not buying as much. If people don't buy as much, then businesses need to cut some employees to cut costs. So the cyclical pattern is starting to form here. While it looks great that inflation is declining, consumer spending is also declining. And if that continues, we will see inflation drop more. But we'll also see more people unemployed, and that creates a whole other set of problems that we'll have to face in 6 to 9 months, maybe even longer than that. So there's a lot of major action happening this week with inflation, with the retail sales numbers that you see here, which have been steadily declining. We'll see if that continues that trend. It's only a 3-month trend, but that could be a big factor for our markets going forward. So you've got major announcements Tuesday, Wednesday, and Thursday. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.